Hello, everyone. Welcome back to another episode of our podcast. I'm Adam, your host, and today we have something incredibly useful and practical to talk about: the world of banking. Now, before you think, oh, banking vocabulary? That sounds boring. Let me stop you right there. Trust me, this is one of those things you absolutely need to master if you're learning English. Whether you're planning to live in an English-speaking country, go on vacation, or just manage your finances better, knowing how to navigate a bank in English is essential. And don't worry, we're going to make it fun, engaging, and easy to understand. Joining me, as always, is my wonderful co-host, Sophia. Sophia, how are you doing today?
I'm doing great, Adam, and I'm so excited for today's topic. Hi, everyone. If you're listening right now, you're going to walk away with so much knowledge about banking terms and phrases that you'll feel like a pro the next time you step into a bank. I'll also share a little personal story later about my first experience at a bank in a foreign country. And let me tell you, it wasn't exactly smooth sailing. But before we dive into that, let's talk about why this topic is so important for English learners.
Absolutely, Sophia. Banking is one of those things that we all have to deal with sooner or later, no matter where we live. And if you don't know the right vocabulary, it can feel overwhelming and even a bit intimidating. Imagine this. You walk into a bank, you need to open an account, and the person behind the counter starts asking questions like, do you want a checking account or a savings account? Or, what's your preferred deposit method? If you don't know what those words mean, it's easy to feel lost.
So true, Adam. And let's face it, not knowing what to say, or worse, misunderstanding what someone else is saying, can lead to mistakes. You might end up opening the wrong type of account or even losing money because you didn't understand the fees. And honestly, that's exactly what happened to me when I first moved to the UK.
Oh, now you've got to share this story, Sophia. What happened?
Well, okay, let me set the scene. I had just moved to London and I was super excited to open my first bank account there. I thought I was prepared. I had my documents, my passport, and my address proof. I walked into the bank feeling pretty confident, and I said, "Hi, I need to open a bank account." The teller was really friendly and asked, "Would you like a checking account or a savings account?" And that's where things started to go wrong. I froze. I had no idea what those terms meant. In my head, I was thinking, checking what? Saving what? I tried to play it cool and said, just a normal account.
Oh no, I can already picture the confusion on both sides.
Exactly. The teller looked at me, clearly unsure what I meant by normal account. She tried to explain, but the more she talked, the more confused I got. In the end, I just nodded and said, "Okay, checking, I guess," without even understanding what it was. Later, I realized I had chosen an account that wasn't the best fit for me, all because I didn't know the vocabulary.
That's such a relatable story, Sophia. And honestly, I think a lot of our listeners can connect with that feeling of being completely out of their depth in a new situation.
Absolutely, and that's why this episode is so important. By the end of today, our listeners are going to feel confident walking into any bank and understanding exactly what's being said. We're going to break down the key vocabulary, explain it in simple terms, and even give you some fun, real-life examples to make it stick.
And let's not forget the fun part. Learning English doesn't have to feel like a chore. In fact, let's start things off with a little quiz to get everyone thinking.
Ooh, I love quizzes. What do you have for us, Adam?
All right. Here's the question for you and for everyone listening. What do you think the term PIN stands for? If you've ever used an ATM, you've entered a PIN. But have you ever stopped to think about what those 3 letters actually mean? Take a moment to think about it.
I'll admit the first time I heard the word PIN, I thought it was just a random word. Like, here's your PIN. Use it to get your money. I never even thought to ask what it stood for.
You're not alone, Sophia. A lot of people use the term without realizing what it actually means. So, here's the answer. PIN stands for Personal Identification Number. It's that secret code you use to access your account, either at an ATM or when making card payments.
That's such an important term to know. And here's a quick tip for everyone. Never share your PIN with anyone, not even your closest friends. Think of it as the key to your bank account. You wouldn't give someone the key to your house, right?
Exactly. Keeping your PIN safe is one of the most basic yet crucial rules of banking. And speaking of basics, that's exactly what we're going to cover next. We'll talk about essential banking terms like balance, deposit, withdrawal, and more, and explain how to use them in real-life situations. But before we dive in, Sophia, do you have any final thoughts to share about why this topic matters so much for our listeners?
I do. I think the most important thing to remember is that learning this vocabulary isn't just about language, it's about building confidence. When you know the right words, you can walk into a bank, ask for what you need, and feel completely in control. That's such an empowering feeling, especially if you're living in a new country.
Well said, Sophia. All right, everyone, get ready to dive into the world of banking vocabulary. Stick with us, because by the end of this episode, you'll have the tools you need to handle any banking situation with confidence. Let's get started. All right, everyone, let's dive into the essentials, the banking terms that you're going to use every day. We'll make this fun, I promise. So, first up, balance. This is probably one of the most common words you'll hear when managing your bank account. Simply put, your balance is the amount of money you have in your account at any given moment. It's the total of all deposits, withdrawals, and fees that have occurred. If you have $500 in your checking account, that's your balance. But here's the thing, your balance changes all the time. You deposit money, it goes up. You withdraw money, it goes down. Keeping track of your balance is key to staying financially organized, and we'll make sure you know exactly how to handle it.
Absolutely, Adam. And balance is just the start. The next term is deposit. Depositing money is when you add money into your account. So, let's say you've just received your paycheck. You'll take that money and deposit it into your account, either through the ATM, by visiting the bank, or even online. Deposits are how you build up your balance. It's crucial to understand the process because when you deposit money, it's added to your account, and that's your available balance. But here's a fun tip. Keep track of your deposits. I once accidentally deposited less than I thought, and it took me a while to notice. Always confirm the amount, especially if you're using an ATM. A deposit is one of the easiest actions, but you want to be sure it's correct.
Great tip, Sophia. Now let's talk about the opposite of depositing, withdrawals. A withdrawal is when you take money out of your bank account. This could be at an ATM, when you're buying something with your card, or transferring funds to another account. Let's say you want to withdraw $100 from your account. Your balance will drop by that amount. Withdrawals are crucial to understand because they directly affect how much money is available to you. So, when you're managing your finances, knowing how to make withdrawals efficiently is important. You don't want to spend more than you have, or you might end up with overdraft fees. Always check your balance before making a withdrawal to avoid surprises. And when using your debit or ATM card, make sure you know the withdrawal limits as well.
And speaking of spending more than you have, that brings us to overdrafts. An overdraft happens when you withdraw more money than is available in your account. It can happen accidentally. Say you forget a payment or don't realize a recent purchase took more from your balance than you thought. The bank may still allow the transaction, but they'll charge you a fee for going into the negative. It's really important to keep track of your balance so you avoid overdrafts. Some banks offer overdraft protection, but it's still a good idea to check your account regularly. I've had a close call before with overdrafts, and trust me, they're no fun. The fees can add up quickly, and you'll be paying extra just for a simple mistake. So always double-check your balance before you make any withdrawals.
Exactly, Sophia. And with that, we've covered the key terms you need to know: balance, deposit, and withdrawal. If you've got those down, you're on the right track. Remember, your balance is what's in your account. A deposit adds to it, and a withdrawal takes from it. It might sound simple, but trust me, these terms will pop up in almost every banking situation you'll face. Once you're comfortable with them, you'll feel much more confident managing your money. And one last tip before we move on: stay on top of your balance, especially when making withdrawals. You don't want to run into any surprises or fees. All right, now we're taking a huge step forward, opening your first bank account. Whether you're new to banking or just need a refresher, we're going to walk you through the entire process. So, let's set the scene. You've just moved to a new country, or maybe you've just started a new job, and now you need a bank account. This is one of those moments that can feel a little intimidating, especially if you're not familiar with the language or procedures. But don't worry, Sophia and I are here to help you navigate through it. So, let's kick things off. Sophia, can you share what your experience was like when you opened your first bank account?
Oh, Adam, I can definitely relate. When I first moved to the UK, I had to open a bank account, and let me tell you, I had no idea what to expect. I walked into the bank with all my documents, passport, proof of address, the usual stuff, but I had no clue what to say. The first question the bank officer asked me was, "What type of account would you like to open?" And I froze. At the time, I had no idea there were different types of accounts. I remember thinking, the normal one. That was pretty embarrassing. But don't worry, I figured it out, and now I'm here to share it with you, so you don't make the same mistake. So, Adam, what are the first things you need to do before opening a bank account?
Good question, Sophia. The first thing you need to do is research which type of bank account is right for you. In many countries, there are at least two main types: a checking account and a savings account. A checking account is what you'll use for day-to-day transactions like paying bills, withdrawing money from ATMs, or making purchases. It's designed for regular use. On the other hand, a savings account is usually for longer-term savings and typically earns interest. So, you need to decide: do you need an account to manage daily expenses, or are you looking to save for something special? Some banks even offer combined accounts, which can give you the best of both worlds. So, Sophia, when you opened your account, did you go for checking or savings?
I went for a checking account because I needed it to manage all my daily transactions, paying for things, transferring money, etc. But what I didn't realize at first was that some accounts come with fees. Yes, fees, that dreaded word. Some accounts charge monthly fees unless you keep a certain minimum balance, or they charge for additional services like wire transfers or ATM usage. It's crucial to ask the bank about these fees before you open an account, so you don't end up paying more than you need to. I also had to decide whether I wanted an account with online banking or one with a traditional bank book. I opted for online banking because it's more convenient, and I could manage everything from my phone.
Great point, Sophia. Fees can really sneak up on you if you're not careful, so it's always a good idea to ask about them up front. Now, let's talk about the documents you need to bring with you when opening an account. Typically, you'll need a proof of identity. A passport, ID card, or driver's license is usually fine. You'll also need proof of address, which could be a utility bill, rental agreement, or even a bank statement from your previous bank. And in some cases, you might need a social security number or an equivalent in your country. Now keep in mind that some banks might ask for more documents, so it's always a good idea to double-check with them before you go in. What documents did you need, Sophia?
Oh, the document hunt. I had to gather a lot of paperwork when I opened my account. I needed my passport, a utility bill showing my name and address, and proof that I was employed. Basically everything that proves I was living and working there. Some banks might even ask for a reference from your previous bank or employer, so it's a good idea to get everything organised before heading to the bank. Don't worry, though. It might sound like a lot, but once you have the right documents, the process goes much smoother. Also, be prepared for a little wait. Banks don't always open new accounts right away, so you might need to come back a day or two later to finalise everything.
That's a great tip, Sophia. Always be prepared for some waiting time. And one more thing to keep in mind is setting up online banking. Almost all banks offer this service, and it's incredibly convenient. You can transfer money, check your balance, and pay bills, all from your phone or computer. When you open your account, ask the bank officer about setting up your online banking and whether you'll need any additional steps. It's super easy to do, and you'll wonder how you ever lived without it.
For sure. I set mine up right after I opened my account, and it saved me so much time. It's also a good idea to ask about any banking apps the bank might have. Many banks now have apps that make managing your account even easier. You can check your balance, deposit checks, and even transfer money, all on the go. Just make sure to keep your login details safe and secure.
Absolutely. So, to wrap it up, here's what you need to know when opening your first bank account. Decide which type of account you need, checking, savings, or both. Be sure to ask about any fees that might apply to your account. Gather the necessary documents, proof of identity, proof of address, and any other requirements specific to your bank. Don't forget about online banking. It's a game changer.
Exactly. Opening a bank account is an important step, but it doesn't have to be stressful. With the right information and a little preparation, you'll be set to go. So, now that you know what to expect, it's time to take the plunge and get your own account. You'll feel so much more secure and organized once you have it.
All right, now we're cracking the code of account types, a crucial part of managing your finances effectively. If you've ever wondered, what's the difference between a checking and a savings account? Or, which one should I open? You're in the right place. Understanding account types is important because choosing the right one can help you avoid fees, earn more interest, and manage your money better. So, let's get into it. Sophia, when you first started with your bank, did you know about the different types of accounts?
Honestly, Adam, I didn't know much about them when I first opened my account. I was like, I just need a bank account, right? But once I learned more, I realized there are several options out there. The main two types you'll hear about are checking accounts and savings accounts. A checking account is what you'll use for your everyday spending, like paying bills, transferring money, or making purchases. It's designed to be used frequently, so you don't usually earn interest on it. It's just a place to store your money until you need it. On the other hand, a savings account is meant for saving money over time. You won't be using it as often, but it earns interest, so your money grows while it's sitting there. Adam, can you explain more about how these two differ?
Great question, Sophia. So, like you said, checking accounts are primarily for day-to-day use. You can deposit your paycheck, pay bills, withdraw cash, and make purchases. They often come with a debit card and check writing capabilities, making them super convenient for your regular transactions. However, checking accounts usually don't earn much, if any, interest, and some banks charge fees for things like going below a certain balance or using out-of-network ATMs. But don't worry, some banks offer fee-free checking accounts, especially if you set up direct deposit or keep a certain amount of money in your account. It's all about knowing the terms. On the flip side, savings accounts are less about day-to-day spending and more about building up your savings over time. The great thing about savings accounts is that they typically earn interest, money paid to you by the bank as a reward for keeping your money with them. The rates vary, of course, but over time, even small savings can grow. It's a good way to save for things like vacations, emergencies, or big future purchases. But, like you said, Sophia, you don't want to be withdrawing from a savings account too often because banks might limit how many withdrawals you can make each month.
Exactly, Adam. And another type of account that's gaining popularity is the money market account. It's kind of a mix between a checking and savings account. With a money market account, you get higher interest rates than a regular savings account, but you still get the ability to write checks or use a debit card, just like with a checking account. But here's the catch. These accounts often require a higher minimum balance to avoid fees or to earn that higher interest rate. So, it's not for everyone, but it can be a good option if you have a little more money to park in your account. Adam, have you ever used a money market account?
I've considered it, Sophia. A money market account is great for people who want to save but still need a bit of flexibility. But like you said, they often come with higher minimum balances, and you might be limited to only a few withdrawals per month. It's a good balance for someone who has some savings but still wants easy access to their funds in case of emergencies. It's also a great place to park money if you're not planning to use it right away but still want it to grow. But if you're more of a frequent spender than a saver, I'd recommend sticking with a checking account for everyday transactions. Now here's something you might not have heard of: joint accounts. These are accounts shared by two or more people, often used by married couples, roommates, or business partners. Joint accounts work similarly to individual checking or savings accounts, but all account holders have access to the funds. It's a great way to manage shared expenses like rent, utilities, or groceries. Just keep in mind that everyone on the account can make withdrawals, so it's important to trust the people you're sharing it with. Have you ever had a joint account, Sophia?
I've had a joint account with my partner in the past, Adam. It was really helpful for managing shared expenses, like rent and bills. But we did run into a few challenges, especially when it came to balancing who spent what. One thing I would recommend for anyone considering a joint account is to set clear guidelines with the other person as about how much each person is responsible for. Otherwise, it can get a little confusing when it comes time to split costs. Also, if one person has a bad financial history, say they've had issues with overdrafts, it could impact both account holders, so be careful.
Great advice, Sophia. So, to sum it all up, here's a quick rundown of the account types we've discussed today. Checking accounts are for everyday transactions. They're convenient, but may have fees. Savings accounts are for saving money and earning interest. They don't allow as many withdrawals, but they help your money grow over time. Money market accounts offer higher interest rates and more flexibility, but often come with higher minimum balance requirements. Joint accounts allow multiple people to share an account, great for managing shared expenses, but requiring trust and clear agreements.
I think that covers the main types of accounts. Choosing the right one depends on your needs and goals. If you're someone who needs to manage daily expenses, a checking account is for you. If you're focused on saving, go for a savings account. And if you're looking for a bit of both, maybe a money market account is worth considering.
Absolutely. And if you're ever in doubt, don't hesitate to ask your bank for more information. They can help you find the account that best suits your lifestyle. All right, now we're going to dive into one of the most important aspects of managing your bank account: deposits and withdrawals. Whether you're getting paid, paying bills, or just moving money around, understanding how these transactions work is key to keeping your finances in order. And don't worry, we're going to break it all down and make it simple. So, let's start with deposits. Sophia, what's your experience with deposits, and how did you first learn about them?
Oh, Adam, I remember my first deposit like it was yesterday. I had just opened my bank account, and I was excited to deposit my first paycheck. I remember walking into the bank, filling out the deposit slip, and feeling a little nervous. It's such a basic thing, right? But I didn't want to make any mistakes. So I handed the slip to the teller, and she showed me exactly how to fill it out. It was a learning moment. For me, it was all about knowing the correct amount to deposit and understanding how to do it safely. The first thing to know about deposits is that you can deposit money in several ways: cash, checks, or even transferring money from another bank. Adam, what are some of the most common ways people make deposits these days?
Great question, Sophia. These days, the most common way to make a deposit is through direct deposit. This is when your employer automatically transfers your paycheck into your bank account. It's super convenient and, honestly, it saves you a trip to the bank. Direct deposit is the easiest way to ensure your money is always safely deposited into your account, and it's usually free. Another popular method is using ATMs. Most ATMs allow you to deposit cash or checks directly into your account. You just need your debit card, and the ATM machine will guide you through the process. Plus, many ATMs offer instant deposits, meaning the money shows up in your account almost immediately. But there's also the traditional way of making a deposit: going into the bank and handing your money or check to a teller. While this isn't as popular as it used to be, it's still an option, especially if you're dealing with large sums of cash.
That's right, Adam. And speaking of checks, let's talk about check deposits for a minute. A lot of people don't use checks as much anymore, but they can still be an important part of your financial life, especially if you're receiving payments or need to send money. To deposit a check, you'll need to endorse it by signing the back of it. You'll also need to provide a deposit slip, just like you would for cash deposits, unless you're using an ATM or mobile banking. And with mobile deposits, you can take a picture of the check using your phone's banking app, and the bank will deposit it for you. It's pretty convenient, especially if you're not near a branch or ATM. Adam, have you ever used mobile deposits?
I sure have, Sophia. Mobile deposits are one of the best inventions ever. The first time I used it, I was honestly amazed at how easy it was. You just open your bank's app, snap a picture of the front and back of the check, and voila, it's deposited into your account. It saves you time and is perfect when you're on the go, and you don't have to worry about forgetting to deposit the check, which can happen when you're busy. However, it's important to check if your bank has any deposit limits or holds on checks when using this feature, because some banks might place a hold on the money for a few days, especially if it's a large check. It's also good practice to keep the check for a few weeks until you confirm that the deposit went through.
Great reminder, Adam. So, now that we've covered how to make deposits, let's move on to withdrawals. Withdrawals are just as important, and there are a few ways to access your money. The most common method is using your debit card at an ATM. Withdrawing cash from an ATM is simple. You just insert your card, enter your PIN, and select the amount you want to withdraw. But here's something you need to remember. Many ATMs charge fees, especially if you use an out-of-network machine. This is where it's important to find ATMs that belong to your bank or are part of a network your bank is connected to. That way, you avoid those pesky fees. Adam, do you always use ATMs from your bank? Or have you had to deal with fees before?
Oh, I've definitely dealt with ATM fees before. It's something I try to avoid as much as possible. If I can, I always use ATMs that are part of my bank's network because those transactions are usually free. But sometimes, you're in a situation where the nearest ATM isn't part of your bank's network, and in those cases, I've had to pay a fee. It's frustrating, but it's usually a small price to pay if you really need the cash. That's why I also try to plan ahead and take out enough money when I'm near my bank's ATM so I don't have to pay extra fees later. There are also some banks that offer unlimited free withdrawals at any ATM, so it's always worth checking the terms of your account.
That's a great strategy, Adam. And just like with deposits, there are other ways to make withdrawals too. For example, you can transfer money from your checking account to someone else's account using online banking. This can be really helpful if you need to pay for something, like rent or a bill, without using cash. You can also make withdrawals by visiting a bank branch in person, where you'll fill out a withdrawal slip and hand it to the teller. And let's not forget about e-wallets and mobile payments. These are becoming more popular for digital withdrawals, where you can move money from your bank account to services like PayPal, Venmo, or even to your mobile phone for payments.
That's a really good point. Whether you're withdrawing cash, paying someone online, or transferring money to another account, knowing how to make withdrawals is just as crucial as understanding deposits. The key is to always keep track of your balance and know where you're making your transactions. Withdrawals should be planned, especially if you're trying to avoid overdrafts or unnecessary fees.
Absolutely, Adam. So, to summarize what we've covered today, deposits are how you add money to your account, whether it's through direct deposit, ATM deposits, or mobile deposits. Withdrawals are how you take money out of your account, whether through ATMs, online transfers, or bank branches. Always keep track of your balance and be mindful of ATM fees, especially when using out-of-network machines.
Exactly. Mastering the art of deposits and withdrawals is all about staying organized and knowing your options. Once you get the hang of it, managing your money will become second nature. All right, everyone. Now, we're unveiling the secrets of successful money transfers. Whether you're sending money to a friend, paying for a service, or transferring funds internationally, knowing how to transfer money efficiently and securely is a game changer. This chapter is all about simplifying the process and helping you avoid common mistakes. So, Sophia, have you ever had to make an international money transfer? I know those can be a bit tricky.
Oh, absolutely, Adam. I've had to make international transfers before, and let me tell you, it can be a bit of a headache if you don't know what you're doing. The first time I did it, I was sending money back home to my family, and I didn't realise that different services have different fees, exchange rates, and transfer times. I ended up paying more in fees than I anticipated, and it took longer than expected for the money to arrive. So, learning the best way to transfer money was a big lesson for me. What about you, Adam? Have you had any money transfer mishaps?
Oh yes, I've definitely learned my fair share of lessons too. One time, I needed to send money to a friend overseas, and I decided to use a well-known international transfer service without really researching it. The transfer fees were higher than I expected, and the exchange rate wasn't favorable at all. It got me thinking, there has to be a better way. So, I started looking into different methods, and now I always compare fees, exchange rates, and transfer speeds before choosing a service. It's all about being informed and making sure you're not paying unnecessary costs.
Exactly, Adam. The first step in making a successful transfer is choosing the right service. You've got traditional methods like banks, and then there are online services like PayPal, Venmo, and TransferWise, to name a few. Banks are reliable, but they tend to have higher fees and longer processing times for international transfers. On the other hand, online services can be faster and more affordable, but sometimes they have limits on the amount you can send, and the recipient might need to set up an account with the service. Have you ever used an online money transfer service, Adam?
Yes, I've used TransferWise, now called Wise, a few times, and I love it. The great thing about Wise is that it uses the mid-market exchange rate, which is the most accurate and fair rate, and their fees are really transparent. You can see exactly what you'll pay up front, and there are no hidden charges. Transfers can also happen quickly, depending on the country. It's definitely more affordable than using a bank for international transfers, and the best part is that it's super easy to set up. Plus, the recipient doesn't need a Wise account to receive the money. They just need their bank account details.
Wise is definitely a great option, Adam. Another online service I've used is PayPal. It's super convenient for sending money quickly, especially if the person you're sending money to already has a PayPal account. However, you do need to be cautious of fees. If you're sending money internationally or using a credit card to fund the transfer, PayPal can charge you quite a bit. So I always check the fees beforehand to avoid any surprises. Plus, it's important to note that the exchange rate PayPal offers might not be as competitive as services like Wise. But for quick transfers between people who already use PayPal, it's a solid choice.
Great point, Sophia. PayPal is definitely convenient, but you have to be mindful of the fees. That's one of the biggest things to keep in mind when choosing a transfer service: fees. Whether you're sending money domestically or internationally, it's crucial to understand the fee structure. Some services charge a flat fee, while others charge a percentage of the transfer amount. And then there's the exchange rate. Even small differences in exchange rates can add up over a large sum. So, always check what exchange rate you'll be getting and whether it's a good deal. Another option worth mentioning is mobile payment apps like Venmo, Zelle, and Cash App. These are great for domestic transfers, especially if you need to send money to someone quickly. They're free to use in many cases, as long as you're not using a credit card or transferring internationally. Zelle, for example, is integrated into many banks' mobile apps, so you can send money directly from your bank account with no fees involved.
I agree with you on the mobile apps, Adam. For anyone who needs to send money within the US, Zelle is awesome because it's instant. The money goes directly into the other person's bank account within minutes. Plus, it's integrated into many mobile banking apps, so you don't even have to download another app. The only catch is that you can't use Zelle for international transfers, and it's generally only for sending money between people you trust, since it's harder to reverse transactions. But for quick fee-free domestic transfers, it's perfect.
Exactly, Sophia. And one of the best things about using these services is that you can track your transactions and keep everything organized. If you're making regular transfers, it's helpful to have everything in one place and have a clear record of where your money's going. Plus, Some services even allow you to set up recurring transfers, which is great for things like paying bills or sending money to family members regularly. So, let's recap the main things to consider when making a money transfer. Compare fees. Look at the upfront cost, as well as any hidden fees like exchange rate markup or service charges. Check the exchange rate. Always make sure you're getting the best rate, especially for international transfers. Choose the right service. Depending on whether you're sending money domestically or internationally, choose the most cost-effective and reliable service. Track your transfers. Keep an eye on your transactions, and make sure you get a confirmation for each transfer.
And remember, Adam, always make sure the service you're using is secure, especially when you're sending money to people you don't know. You want to protect yourself from scams and fraud. Always use trusted services with encryption and secure payment methods.
All right, everyone. Now we're going to uncover the world of bank fees. Those sneaky charges that can creep up and drain your account if you're not careful. From maintenance fees to ATM fees, it seems like there's always something we're getting charged for. But don't worry. In this chapter, we're going to teach you how to outsmart those fees and keep more money in your pocket. So, Sophia, have you ever been caught off guard by a bank fee?
Oh, Adam, definitely. I remember when I first got my bank account, I didn't really pay attention to the fees. One month, I checked my account and noticed that I was charged for a monthly maintenance fee, even though I thought my account was supposed to be free. I didn't know that there were minimum balance requirements, so I had to learn the hard way. It was frustrating because I had no idea where those fees were coming from. Have you ever been surprised by any fees?
Yes, Sophia. The infamous maintenance fee. I've definitely fallen victim to those before. It's crazy how small fees can add up over time. One time, I went to an ATM that wasn't part of my bank's network, and I was hit with a $3 fee just for withdrawing cash. That's when I realized I needed to be much more mindful of where I use my debit card and which ATMs I use. But let's not get ahead of ourselves. Let's start by talking about some of the common bank fees that can catch us off guard and how we can avoid them.
Right. There are a few classic fees that people often encounter, like ATM withdrawal fees. These happen when you use an ATM that isn't part of your bank's network. Like we just mentioned, it's easy to forget, especially if you're in a rush or in an unfamiliar area. Another common fee is the overdraft fee. This one is a big one. It happens when you try to withdraw more money than you have in your account. Your bank will approve the transaction, but they charge you a fee for covering the amount. Some banks even charge non-sufficient funds, NSF, fees when you don't have enough funds for a transaction, but they still try to process it. That can be a big hit to your balance. Adam, how do you make sure you avoid overdraft fees?
Great question, Sophia. I used to worry about overdraft fees a lot until I set up overdraft protection. This is a service that links your checking account to a savings account or a credit line. So if you try to spend more than what's in your checking account, the money gets transferred automatically from your savings or line of credit to cover it. Some banks also allow you to link a credit card to your checking account for overdraft protection, though that can come with interest charges if you don't pay it back on time. Another way to avoid overdraft fees is to monitor your balance regularly, either through your bank's mobile app or online banking. It's super helpful to know exactly where you stand so you don't accidentally spend more than you have.
That's such a great tip, Adam. Overdraft protection is definitely a lifesaver if you're prone to occasional overspending. But, like you said, it's also important to keep an eye on your balance. A lot of mobile banking apps now have alerts that notify you when your balance is low or when a transaction goes through. I find those super helpful. Another fee that's often overlooked is the paper statement fee. Some banks charge a small fee for sending paper statements instead of offering electronic ones. This is something I didn't know at first, but switching to e-statements saved me a little money each month. Adam, are you a fan of e-statements?
Definitely. I've been using e-statements for years now. It's so much more convenient, and I love how I can access my account history anytime from my phone or computer. Plus, it's good for the environment, and as you mentioned, it's a great way to avoid paper statement fees. Most banks don't charge for e-statements, so that's a quick win. It's just a matter of adjusting your preferences in your online banking account. Another sneaky fee I've encountered is the foreign transaction fee. If you use your debit or credit card abroad, some banks charge a fee for processing transactions in foreign currencies. Have you had any experiences with this, Sophia?
Oh, yes, Adam. I've been hit with those fees before. It's so annoying because you don't realize it until you're back home and you see an extra charge on your statement. I learned the hard way that it's important to check with your bank before traveling internationally to see if they charge foreign transaction fees. Some banks offer cards with no foreign transaction fees, which is a huge benefit if you travel often. Or, if you're planning to travel, you can consider using a travel-specific credit card that doesn't have those extra fees. That way, you can enjoy your vacation without worrying about extra charges piling up.
That's a fantastic tip, Sophia. It's all about being proactive. If you know what fees your bank charges and how to avoid them, you'll be able to keep your balance intact and avoid unpleasant surprises. One more common fee I wanted to mention is the monthly maintenance fee, which we touched on earlier. Many banks charge this fee if you don't meet certain conditions, like maintaining a minimum balance or making a certain number of transactions. It's a good idea to read the fine print and make sure you're meeting those requirements so you don't get stuck paying that fee every month.
Absolutely. Some banks even offer fee waivers if you set up direct deposit or maintain a specific balance, so always check to see if there's a way to avoid those fees. It's worth taking a few minutes to compare different accounts and see which one offers the best deal for you. If your current bank is charging too many fees, it might be worth looking into alternatives. There are a lot of online-only banks now that offer lower fees and better interest rates.
I couldn't agree more, Sophia. And speaking of alternatives, if you're tired of fees altogether, there are some fee-free banks out there that don't charge anything for basic services. These are often online banks, and they can be a great option if you want to avoid the typical banking fees. They might have fewer physical locations, but they offer mobile apps and online tools to make banking just as convenient.
Exactly. Now, let's do a quick recap of what we've learned in this chapter. ATM withdrawal fees. Be mindful of using out-of-network ATMs to avoid unnecessary charges. Overdraft and NSF fees. Set up overdraft protection and monitor your balance regularly. Paper statement fees. Opt for e-statements to save money and avoid environmental waste. Foreign transaction fees. Use a no-fee travel card or check with your bank before traveling. Monthly maintenance fees. Know your bank's requirements and consider switching to a fee-free account if necessary.
And remember, the key to avoiding these fees is staying informed, keeping track of your account, and knowing your options. Once you're aware of what fees to watch out for, you can easily avoid them and save yourself a lot of money. All right, we're talking about those moments of panic when you realize your bank card is missing or you can't remember your PIN. These things happen to everyone at some point, but the important thing is knowing exactly what to do when they do. Sophia, I know you've had a situation where you lost your card, right? What was your first reaction?
Oh, Adam, I have a story for you. The first time I lost my bank card, I was traveling, and I realized it was gone when I went to buy some souvenirs. I checked my pockets, my bag, and I even retraced my steps, but it was nowhere to be found. I was in total panic mode. My first thought was, what if someone finds it and starts using it? So I immediately called my bank's customer service line to report the loss. They were super helpful, but it was still a stressful situation. How about you, Adam? Have you ever misplaced your card?
Oh, for sure. I've had a few close calls with lost cards, especially while traveling. But one time, I actually left my card at a restaurant. I didn't realize it until I was back at my hotel, and I had to make another trip to retrieve it. It's always that moment of panic when you check your wallet and feel that empty spot. But I quickly learned the importance of reporting lost cards immediately. Not only does it prevent unauthorized transactions, but it also gives you peace of mind. If you find yourself in a situation where you can't find your card, step 1 is always report it.
Exactly, Adam. And what's great is that most banks now have instant reporting options through their mobile apps. If you're in that moment of panic, you don't have to wait on hold forever. You can usually lock your card through the app immediately, which prevents anyone from using it while you figure things out. Once you've done that, it's important to report the loss to your bank, and they'll issue you a replacement card. You may need to verify your identity or answer a few security questions to confirm that you're the account holder. Have you had to get a replacement card before, Adam?
Yes, I've gone through that process a few times. When I've reported a lost card, the bank has been pretty quick to issue me a replacement, usually within 3 to 5 business days. One thing I didn't know initially was that banks often send your replacement card to the address on file, so it's important to make sure your address is up to date before you request a replacement. I remember one time I was out of the country, and my replacement card got sent to my old address. That was another complication I didn't need. So, double-check your contact details before ordering a new card.
That's such an important point, Adam. It's easy to overlook the address update, but one thing I've learned is that many banks also offer virtual cards now, especially for online transactions. So if your physical card is lost, you might be able to use a virtual card temporarily while you wait for the replacement. Virtual cards are pretty secure because they're tied to your account, but don't reveal your actual card number to anyone. This gives you a bit of extra peace of mind while you wait for the physical card to arrive.
Yes, Sophia. I love the convenience of virtual cards. They're especially useful if you're worried about online fraud and want to minimize the risk of your card details getting compromised. You can use the virtual card for any online purchases, and once it expires, the card number is no longer valid. Now let's talk about those times when we forget our PIN. I think everyone's been there. You stand at the ATM trying to remember that elusive 4-digit code. Have you ever been locked out because of a forgotten PIN?
Oh, absolutely. There have been times when I've tried to use my PIN, and I've been so sure I knew it, but then I'd type in the wrong one, and my card would be blocked. Talk about stressful. But luckily, most banks make it pretty easy to recover or reset your PIN. You can usually do it through your mobile banking app, or by calling customer service. They'll ask you a few security questions to verify your identity, and then they'll either send you a new PIN or let you reset it to something you can remember. But, Adam, do you have any tips on how to make sure you never forget your PIN again?
Great question, Sophia. One tip I always use is to pick a PIN that's easy to remember but hard to guess. Instead of using obvious numbers like 1234 or your birth year, try using a combination of numbers that are personally meaningful to you, but not easily associated with your personal information. For example, I use a combination of 2 memorable years, one from my childhood and one from a trip I took years ago. It's something I can remember, but it's not something people would easily guess. Another trick is to write your PIN down in a secure place. I know that sounds old school, but if you keep it in a safe or password manager, it's a good backup.
I love that idea. Picking a personal yet secure PIN is such an important step. I also recommend avoiding any obvious patterns like repeating numbers, such as 1111 or 4444. These are the first ones fraudsters will try. And if you ever forget your PIN, it's good to reset it immediately rather than trying to guess it multiple times, because entering the wrong PIN too many times can temporarily lock your card. That's another situation you want to avoid.
That's a great point, Sophia. And if you do get locked out of your card, don't panic. Most banks allow you to unlock your PIN after answering a few security questions or verifying your identity. Sometimes, you might even be able to unlock it directly through your banking app. If all else fails, your bank's customer service will help you through the process. Just be prepared to answer a few questions to prove that you're the account holder.
Exactly. And as we wrap up this chapter, let's do a quick recap of what to do when you lose your card or forget your PIN. If you lose your card, immediately lock it through your bank's app or website to prevent unauthorized transactions. Report the loss to your bank as soon as possible. They'll issue a replacement card and may also offer a virtual card for temporary use. If you forget your PIN, don't keep trying to guess it. Reset it immediately through your banking app or by calling customer service. Choose a secure but memorable PIN and make sure to store it safely.
And that wraps up today's episode. We've covered everything from lost cards to forgotten PINs, and we hope you feel more confident navigating your banking journey.
If you've enjoyed this episode, don't forget to hit that like button, subscribe, and share with anyone who might benefit from these tips.
And remember, the more you practice, the better you'll get at using these banking terms in real life. We'll be back soon with more episodes to help you master English in everyday situations.
Thanks for joining us, and until next time, keep practicing and take care. Thank you.